E-filing. The following individual income tax returns and related return conditions cannot be processed using IRS e-file. Tax returns with fiscal year tax periods. Amended tax returns. Returns containing forms or schedules that cannot be processed by IRS e-file. Tax returns with taxpayer identification numbers within the range of 900-00-0000 through 999-99-9999. There's an exception for adoption taxpayer identification numbers, ATINs, and individual taxpayer identification numbers, ITIN, that may fall within that range. The IRS cannot electronically process tax returns with rare or unusual processing conditions, or those that exceed the specifications for returns allowable in e-file. Timely filing. All providers must ensure that returns are promptly processed. A provider that receives a return for electronic filing on or before the due date of the return, including extensions, must ensure that it transmits the electronic portion of the return on or before the due date. An electronically filed return is not considered filed until the IRS acknowledges acceptance of the electronic portion of the tax return for processing. Federal State e-file. Federal State e-file is a cooperative tax filing effort between the IRS and most states, which allows authorized IRS e-file providers to file federal and state returns electronically to the IRS. The state return can be sent linked to the federal return, or it can be sent unlinked, standalone. On linked returns, the federal return must be accepted before the linked state return can be filed. Identity safeguards. Safeguarding taxpayers and IRS e-file from identity theft refund fraud requires providers to be diligent in detecting and preventing identity theft fraud patterns and schemes. Early detection of these patterns and schemes is critical to stopping them and their adverse impacts, and to protecting taxpayers and IRS e-file. While all providers must be on the lookout for fraud and abuse, EROs must be particularly diligent while acting in their capacity as the first contact with taxpayers filing a return. Indicators of abusive or fraudulent returns may be unsatisfactory responses to filing status questions, multiple returns with the same address, and missing or incomplete Schedule A or Schedule C income and expense documentation. A fraudulent return is a return in which the individual is attempting to file using someone else's name or social security number on the return, or the taxpayer is presenting documents or information that have no basis in fact. A potentially abusive return is a return that the taxpayer is required to file but contains inaccurate information that may lead to an understatement of a liability or the overstatement of a credit, resulting in a refund to which the taxpayer may not be entitled. Verifying taxpayer identity. To safeguard IRS e-file from fraud and abuse, an ERO, electronic return originator, should confirm identities and social security numbers, adoption tax identification numbers, and individual tax identification numbers of taxpayers, spouses, and dependents who are listed on the return. To prevent filing returns with stolen identities, an ERO should ask taxpayers not known to them to provide two forms of identification, picture IDs are preferable. That identification should include the taxpayer's name, current or recent address. Also seeing Social Security cards, ITIN letters, and other documents for taxpayers, spouses, and dependents avoids including incorrect TINs on the returns. The IRS has identified questionable Form W-2 as a key indicator of potentially abusive and fraudulent returns. Direct deposit of refund. Taxpayers often elect the direct deposit option because it is the fastest way of receiving refunds. Providers must accept any direct deposit election to qualified accounts in the taxpayer's name at any eligible financial institution designated by the taxpayer. Qualified accounts include savings, checking, share draft, or consumer asset accounts. For example, IRA or money market accounts. Taxpayers should not request a deposit of their refund to an account that is not in their own name, such as their tax return preparer's own account. The taxpayer may not designate refunds for direct deposit to credit card accounts. Qualified accounts are accounts held by financial institutions within the United States and established primarily for personal, family, or household purposes. Providers must never charge a separate fee for direct deposit. Taxpayers must sign and date the declaration of taxpayer to authorize the origination of the electronic submission of the return to the IRS prior to the transmission of the return to the IRS. The declaration of taxpayer includes the taxpayer's declaration under penalties of perjury that the return is true, correct, and complete. The consent to disclosure authorizes the IRS to disclose information to the taxpayer's providers. Taxpayers must sign a new declaration if the electronic return data on individual income tax returns is changed after the taxpayer signed the declaration, and the amounts differ by more than either $50 to total income or AGI, or $14 to total tax, federal income tax withheld, refund, or amount owed. There are two methods of signing individual income tax returns with an electronic signature available for use by taxpayers. Both methods allow taxpayers to use a personal identification number, PIN, to sign the return and the declaration of taxpayer. Self-select PIN is one of those methods. The self-select PIN method requires taxpayer to provide their prior year's adjusted gross income, AGI, amount or prior year PIN for use by the IRS to authenticate the taxpayer's. Practitioner PIN is the other method. This method does not require the taxpayer to provide their prior year AGI amount or prior year PIN. Instead, taxpayers must always sign a completed signature authorization form. Transmission and record keeping. Once signed, an ERO must originate the electronic submission of a return as soon as possible. An ERO must ensure that stockpiling of returns does not occur at its offices. Stockpiling is collecting returns from taxpayers or from another authorized IRS e-file provider prior to official acceptance in an IRS e-file, or after official acceptance to participate in IRS e-filing. Stockpiling refers to waiting more than 3 calendar days to submit the return to the IRS once the ERO has all the necessary information. Again, stockpiling is collecting returns from taxpayers or from another IRS e-file provider prior to the time when the filer is officially accepted into the program, or After official acceptance, stockpiling refers to waiting more than 3 calendar days to submit the return to the IRS once the ERO has all the necessary information for origination. The IRS does not consider current filing year returns held prior to the date it accepts transmission to be stockpiling. EROs must retain certain material, including Forms W-2, 1099-R, and Forms 8453, among others, until the end of the calendar year at the business address from which it originated the return, or at a location that allows the ERO to readily access the material, as it must be available at the time of IRS request. Rejected returns. If the IRS rejects the electronic portion of a taxpayer's individual income tax return for processing, and the ERO cannot rectify the reason for the rejection, the ERO must take reasonable steps to inform the taxpayer of the rejection within 24 hours. When the ERO advises the taxpayer that it has not filed the return, the ERO must provide the taxpayer with the business rule accompanied by an explanation. If the taxpayer chooses not to have the electronic portion of the return corrected and transmitted to the IRS, or if the IRS cannot accept the return for processing, the taxpayer must file a paper return. Refund-related products and advertising. Tax refund-related products are financial products based on taxpayers receiving a tax refund. Financial institutions offer a variety of financial products to taxpayers based on their refunds. Such products include a refund anticipation loan, which is money borrowed by a taxpayer from a lender based on the taxpayer's anticipated income tax refund, and a refund anticipation check, which directs the refund to a financial institution which disperses fees and the balance then to the taxpayer. The IRS is in no way involved in or responsible for RALs, RACs, or other financial products. Providers must not use improper or misleading advertising in relation to IRS e-file, including the periods for refund and tax refund related products, including RALs. Any claims by providers concerning faster refunds by electronic filing must be consistent with the language in official IRS publications. If providers advertise the availability of an RAL or other tax refund related product, the provider and financial institution must clearly refer to or describe the funds as a loan or other financial product, not as a refund. Sanctions. The IRS may revoke participation of an authorized IRS e-file provider, a principal, or a responsible official in IRS e-file if either a federal court order enjoins them from filing returns, or if they are prohibited by a federal or state legal action that would prohibit participation in e-file. Violations of IRS e-file requirements may result in warning or sanctioning of principals, responsible officials, and the authorized IRS e-file provider. Before sanctioning, the IRS may issue a warning letter that describes specific corrective action the provider must take. The IRS may also sanction without issuance of a warning letter. Sanctioning may be a written reprimand, suspension, or expulsion from participation from IRS e-file or other sanctions, depending on the seriousness of the infraction. The provider, principal, or responsible official may appeal sanctions through the administrative review process. Suspended providers and individuals are usually ineligible to participate in IRS e-file for a period of either 1 or 2 years from the effective date of the sanction, but they may reapply after resolution of suitability issues. Individuals of firms expelled from participation may be eligible for reconsideration after a 5-year waiting period. Levels of infractions. The IRS categorizes the seriousness of infractions as Level 1, Level 2, and Level 3. Level 1 infractions are violations of IRS e-file rules and requirements that, in the opinion of the IRS, have little or no adverse impact on the quality of electronically filed returns or on IRS e-file. The IRS may issue a written reprimand for a Level 1 infraction. Level 2 infractions are violations of IRS e-file rules and requirements that, in the opinion of the IRS, have an adverse impact upon the quality of electronically filed returns or on IRS e-file. Level 2 infractions can include continued Level 1 infractions after the IRS has brought the Level 1 infraction to the attention of the authorized IRS e-file provider. Depending on the infraction, the IRS may either restrict participation in IRS e-file or suspend the authorized IRS e-file provider from participation in IRS e-file for a period of 1 year, beginning with the effective date of suspension. Level 3 infractions are violations of IRS e-file rules and requirements that, in the opinion of the IRS, have a significant adverse impact on the quality of electronically filed returns or on IRS e-file. Level 3 infractions include continued Level 2 infractions after the IRS has brought the Level 2 infraction to the attention of the provider. A Level 3 infraction may result in suspension from participation in IRS e-file for 2 years, beginning with the effective date of suspension of the suspension year. Or, depending on the severity of the infraction, such as identity theft, fraud, or criminal conduct, it may result in expulsion without the opportunity for future participation. Let's look at a couple questions. This question has to do with sanctions. Which statement is correct with respect to sanctions the Internal Revenue Service may impose on an electronic filing provider? The service may issue a letter of reprimand or a 1-year suspension for Level 1 infractions. That's not accurate. For Level 1 infractions, we cannot see a suspension. The service may impose a period of suspension that includes the remainder of the calendar year in which the suspension occurs, plus the next 2 years for Level 2. Well, first of all, Level 2 is only a 1-year suspension, and it occurs from the effective date of suspension, not from when the suspension occurs plus 2 years. So a couple problems there. It's not plus the calendar year plus 2 years, and it's not 2 years for Level 2 infractions. The Internal Revenue Service may suspend or expel a filing provider prior to administrative review for a Level 3 infraction. That is accurate. They may prior to administrative review. In the case of a serious situation, they want to stop that provider from filing. So the rules allow for this. So this letter C, this is a correct statement. And then the fourth statement, the Internal Revenue Service may not impose a sanction that is greater than 1 year from the electronic filing program. Well, that's not accurate. We can see 2 years, or we can even see expulsion. So our correct answer here is letter C. And then finally, Michael is a e-file provider, prepared and transmitted a return for Vivian. The service notified Michael that the electronic portion was rejected. Which statement best below describes, or which statement best describes what Michael must do? Michael must advise the taxpayer that the return may never be filed electronically. Well, that's not true. We haven't tried to correct it yet. If Michael cannot correct the error, so if Michael cannot correct the error with the information in his possession, he must take reasonable steps to inform the taxpayer of the rejection within 24 hours and provide the taxpayer with the reject code, accompanied by an explanation. That is absolutely correct. So Michael would first try to correct it on his own. If he can't, he needs to take a reasonable step to inform within 24 hours and provide the taxpayer with appropriate information. This is a correct statement. This is our answer. Michael must mail a paper copy of the return with the original 8453. No. If there was going to be a paper copy filed, Vivian would need to sign that herself directly. This is an incorrect statement. If Michael cannot correct the error with the information in his possession, he must take reasonable steps to inform the taxpayer of the rejection within 1 week. No, the period is within 24 hours. Letter D, this is not correct. Our only correct statement right here, letter B. Okay, well, I hope that this has been helpful to you as you prepare for the enrolled agent exam.